In this video, I'm going to show you a special moving average combination that works amazingly well for trend trading. And then I'll show you how to use it to find very accurate buy and sell signals. So make sure you watch this video till the end because every setting here matters. Alright, let's get started. First, we need to add 6 moving averages to our chart. Don't worry if you're on the free version of TradingView because I'll show you an easy way to do that. So first of all, open the Indicators tab and search for Moving Average Ribbon. It's a built-in indicator on TradingView. Once you add it, you'll automatically get 4 moving averages on your chart. Now we'll customize these 4 moving averages. Open the settings. You can do that from here. For the first, second, and third ones, change the type to EMA. Each of these EMAs will have a length of 34. So the first one, 34. The second one, 34. And the third one also 34. Now for their calculation sources, set the first one to high, the second one to close, and the third one to low. This creates a smooth ribbon that reacts quickly to price but still filters out noise. For the fourth moving average, we'll change it to SMA. A simple moving average with a length of 55, and the source should be close. After all these changes, open the Style tab. Change its color to green so it stands out clearly on the chart. Finally, go to the Style tab and increase the line thickness for all the moving averages so they're easily visible. Make sure you follow the settings I have shown so that you have no trouble in following the trading strategy I will show later in the video. Okay, so these are all the changes we will do. Now we have 4 moving averages, but we need 2 more. So once again, go to Indicators tab, search for Moving Average Ribbon again, and add another one. After that, open its settings also. First of all, remove 2 of the lines because we only need 2 EMAs from this one. Change both to exponential moving averages. Set the first EMA length to 3 and the second EMA length to 5. That is it. We will use these moving averages for another purpose I will share later in the video. Then go to the Styles tab and color the first one red and the second one blue. Then increase their thickness so they're clear. This is it for the settings of this indicator. Perfect. Now we have all 6 moving averages on the chart. 3 EMAs 34 EMA, high, close, and low, 1 green 55 SMA, and 2 short EMAs the 3 and 5 1. Now let's understand what each of them does. The green 55 SMA is our midterm trend filter. It helps us understand whether the overall market is in an uptrend or downtrend. The 3 34 length EMAs form a ribbon, and this ribbon will help us spot pullbacks within the trend. The red and blue EMAs, the 3 and 5, are our short-term triggers. They'll give us the exact moments to enter a trade when the pullback ends. Now let's see how to use this combination for real buy and sell setups.
Do you feel like everyone around you benefits from artificial intelligence, but you have no idea where to start? Don't wait any longer. Start today. Our free trading bot is simple to use, powered by artificial intelligence, and can earn you up to 1% profit every single day. Over 500 members have already joined. Click the link below now to get free access. This is your chance to harness the power of AI and take a step toward a financial boost.
When price is above the green line, that means the market is in an uptrend. When it's below the green line, the market is in a downtrend. So for buy setups, we only focus on times when the price is above the green line. Let's go step by step. Suppose the price was below the green line for a while, and then it crosses above it. That's our first clue that the market might be starting a new uptrend. The next step is to wait for the ribbon, those 3 EMAs to also cross and go above the green line. When you see that, it confirms that the momentum is shifting upward. Now wait for the price to pull back toward the ribbon. This is important. We don't just buy immediately when the ribbon crosses. We wait for a pullback, a small decline that touches or dips slightly into the ribbon. Sometimes, the pullback only touches the top of the ribbon. Sometimes, it dips inside it. Even if it dips just below the ribbon or touches the green line, it's still fine, as long as it's not too far below. If the pullback drops too deep below both the ribbon and the green line, then it's no longer valid because momentum has weakened. Once we have that clean pullback, we look for our entry trigger. The entry trigger happens when the red and blue EMAs cross and both close above the ribbon. When both lines are already above the ribbon, the buy signal is confirmed. Just like we see over here in this example. At that point, we can enter a buy trade right when the next candle opens. The stop loss goes below the lowest point of the pullback, and the take profit is set at 1.5 times the risk. To make this setup even stronger, always check the price action around the pullback. For example, if you see small candles forming inside the ribbon, and then a breakout candle that closes above them, that's a sign the pullback has ended and buyers are stepping in. Combine that with the red and blue lines crossing above the ribbon, and that's your perfect entry. Now let's take a look at another example. Look at this example. Price was below the green line for a while, then crossed above it, and soon after the ribbon went above too. The price pulled back into the ribbon and formed a short consolidation. Then a breakout candle closed above that range, with the red and blue lines crossing above the ribbon. That's the moment we enter the trade. A key tip here: only take the first pullback after the trend change. Once the price has crossed above the green line and given you one valid pullback entry, don't take the next ones. They usually have lower accuracy because the trend might be getting weaker. Wait for the next full trend shift before looking for another setup. And you can see how strongly the price moved up after that. Now let's look at the sell setup. It's basically the opposite. When price goes below the green line, that's our first sign that a downtrend might be starting. Then wait for the ribbon, those 334 length EMAs, to also go below the green line. When all three are clearly below, it confirms that sellers are in control. After that, wait for a pullback into the ribbon. Just like before, the price might touch the ribbon or even poke slightly above it, but as long as it's close to the green line and doesn't push too far, it's still valid. Once the price starts turning back down, we look for the red and blue lines to cross below the ribbon. When both lines close below, that's our sell signal. In that moment, we can enter a sell trade right at the opening of the next candle. The stop loss goes above the pullback high, and the target is 1.5 times the risk. Or to take proper advantage of your positions and make the most profit out of them, you can also use the take trailing stop loss and take profit methods. But remember, no strategy in trading has a 100% win rate. Even the cleanest signals can fail sometimes. That's the complete moving average strategy. It's clean, visual, and very accurate when followed with discipline. If you found this video helpful, don't forget to like, subscribe, and share your thoughts in the comments below. Thanks for watching the video till the end, and I'll see you in the next video.